Good morning and welcome. We have a full panel today, and to my very, very biased mind, representing really one of the most exciting topics in the field today, which is the Israeli impact investing ecosystem. My name is Vanessa Bartram. I'm the managing partner of a fund named Zora in Tel Aviv that invests in Israeli startups in health, education, environment, and financial inclusion. So I'm going to be introducing the panelists briefly. We'll have a number of questions, but I want to encourage people to understand that in the 40 minutes that we have to discuss this today, consider this potpourri. You are going to hear a little bit about everything from a wide range of asset classes. This is a sample of what's going on in Israel. To that end, I want to give a little bit of context about what's happening there. My informal calculations tell me that we have about a little over $600 million in assets under management in the impact investing space in Israel. This is something that we're definitely at the nascent stages of. Israel generally, in terms of context for venture capital, for private equity, has about 2.5 times as much invested per capita basis as the US does. So if we look at what that would mean in an impact setting, that's about $2.5 billion that we can reasonably project that Israel would have under management in the sort of short to medium term. So I know my goal as someone helping to develop the impact space in Israel, and a goal that we share across the panel here, these are all pioneers in the Israeli impact ecosystem as individuals, as organizations, is to help grow that ecosystem and to fill that gap that we have right now. As you'll see and you'll learn from what we have on the panel, the engine is built. The past few years have really been about putting the pieces in place. The infrastructure is really there. The deal flow is there. We have about 5,000 startups in Israel that are tracked by Startup Nation Central. Over a third of those are in areas that naturally lend themselves very well to impact, whether that's ag tech, clean energy, et cetera. So compare that, about a 2,000 number of startups, to 2,000 startups total that are tracked in New York City. We have an amazing deal flow. We're an amazing hub for technology, for entrepreneurship, for research, for venture capital community, and we're all ready to really blow this out of the water in the next several years. So it's exciting to have this panel here. I will introduce people extremely briefly, and then we have a range of questions, and you'll be able to hear a little bit more and sample of the type of work and the type of investments that are going on in Israel now. So next to me, we have Yossi Abramowitz, who I know many of you know already, is a personal hero, was the founder of Israel's leading solar developer, Arava, and more recently started Gigawatt Global, which is providing solar power across Africa, starting in Rwanda. We have Alan Barkat, a really pioneer in this field, after leaving a esteemed track record in the private equity industry, started Dualis Social Investment Fund, a nonprofit, in 2008, and has really been one of the people instrumental in building this field. Kalanit Welfer with the Ella Fund. Ella, I'm giving some personal commentary here also, so forgive me. Ella is fantastically exciting. It is a private equity fund, traditional private equity fund, looking for financial returns first, but really believes that a critical piece of this is bringing and considering and assessing and measuring the social impact that they're creating also. So they're doing growth stage capital in what's called the periphery in Israel, in the Galil and the Negev. So we'll hear more about that. Shlomi Zidki from Social Finance Israel, working on social impact bonds, which Shlomi will tell us a bit more about. I want to emphasize here the work that Social Finance Israel is doing is not just innovative within Israel. The work that they are doing is a model of innovation globally. They recently did a diabetes bond that is now being looked at to be replicated around the world. So Israel was the testing site for that innovation there. And we have Dahlia Black. Dahlia is a corporate VP turned impact investing specialist who works with family offices, high net worth individuals, federations, to help navigate and advise them in how to start this investment process in Israel. And finally, Eve Rubenstein, the U.S. Director of Israel Venture Network. Israel Venture Network also has a very strong, large portfolio of social businesses in Israel, and we'll hear from more from her on the impact of those now. So I want to start off a little bit. Alan is someone who's been in this field for a long time. Tell us about this process, about taking something that, for now feels a little bit niche, moving it to the mainstream. What does that look like?
Thank you, Vanessa. I grew up in the Israeli high-tech market historically, in the startups, and then managed Apex Partners under Ronald as my chairman for 11 years or so. And about 10 years ago, transitioned from that world of private equity or venture capital to investing in social entrepreneurs. And basically, Dualis is the duality of social and business. We focus on looking at how you can invest for profit. So we're a non-for-profit that invests in for-profit businesses, equity, to develop a social mission on the area of job creation or employment. And I'll give you an example. A lot of people in Israel that have been to Israel have eaten at our restaurant. The first project we got involved with was a social restaurant called Lilit or Liliot in Tel Aviv. I see people nodding their head. Mm-hmm. And that model basically takes youth at risk that have fallen out of school at the ages of 16 and gives them a year of training, both personal and vocational training. When we started in 2008, 2009, when we talked about social businesses, obviously everybody looked at us and said, that's water and that's oil, and you can't mix the two. And now 10 years later, or 8 years later, you look down the road and say, well, this is growing. We now have invested in 15 companies in Israel. We employ hundreds of people. We have multiple businesses that are profitable. We've raised loans from private investors that have already seen about 30 to 40% of their money back after 4 or 5 years. We've been involved in a government tender that's called the Yozma. Michael talked about it before, which basically gives a matching grant from the government, a 40% matching grant to 60% that we raise both in grants and loans from investors. I'm proud to say that I think that we were one of the first, together with IVN, that raised money from the endowment of UJ New York that came in with a loan, which at least in my mind was a first. I think we've been the first to bring a PRI from the Fisher Foundation in Detroit that came in and was interested in the work we're doing with youth at risk and structured a PRI. It took us, somebody from JBS talked about 2.5 years. Well, it took us only about two years to get that through. So when you do something the first time, yes, it takes time. I grew up in Japan at one point and worked for an Israeli high-tech company. I had a great mentor. He said to me, Alan, son, that was my name in Japan, Alan, I always remember the impossible takes a little bit longer. And I think that saying has a lot to do, it's very relevant for this room. Impact investing is still a very, very young area. Our challenge has to be how we take this from being a niche place with $600 million in Israel and, I don't know, a couple hundred startups directly in social businesses and thousands, obviously, in the tech market, to something that is mainstream in society and brings business and social good or social impact to a more central point. In a lot of ways, I look at impact investing as being the next generation of corporate social responsibility. That's the way I would see it. Moving a little bit more to the center of the graph that we had on the screen earlier between for-profit and not-for-profit. I wanted just to comment on the fact of what does it mean to go to mainstream. When we look at Dualis, our issue is how do you scale models? We've done 15 models. They're startups. They're young companies. We have about aggregate of about $10, $12 million of revenue. But how does that go if you want to make that something that's going to have a big impact? And I'll just give you an example of the restaurants. We started 8 years ago with Liliot. We now are partners in 4 or 5, and we're working on a model how we take that to 100 social restaurants across Israel that we won't own them, but we'll be partnering with them. And to give you a flavor, that would take care of or address 5% of the dropout rate of youth in Israel at the age of 16. All right? And that's just 100 businesses. That's not, and we're not talking about billions of dollars. Now, yes, it needs to be funded partially by debt and partially by grants still. It's not a full market rate return, but it's obviously got an ability to do something that's much, much larger than just a straight philanthropic gift. So that's one. The second thing is just to mention is that one of the things that we found is that we're short on management. It's probably the biggest issue we have with managing small social businesses to grow. And so we've partnered with the Rothschild Foundation and with the College of Management in Rishon LeZion to set up an academic center for impact investing in social businesses. And that program has got a special MBA course that focuses on case studies that come out of this world, of our world. We're partnering obviously with SFI that's very involved in this, and other organizations. The first cohort finished their MBA basically last month, and the second started. And I think that that's a way that we're hopefully going to develop curriculum in Israel about the space that hopefully can also be similar to what Startup Nation is doing, trying to open the idea of what we're all doing here and basically use some of those ideas as entrepreneurs to do good, not just in Israel.
Yeah, that's great. Thank you. Yves, Levin, talking sort of building onto this, I know the government tender that IVN and Dualis participated in, is one way to help stimulate the development of this industry. Tell us a little bit about that experience of the government tender for IVN and what you see the impact from a social perspective looking like.
So, the government tender came, as we all know, came as a result of the increasing awareness of the poverty and the inequities that exist in certain social sectors in Israel. So the impact has been that the work that we've been able to do, we've been able to sit at the table with the government and help shape policy, help shape the way that Israel will look at social businesses. So one of the things that we were able to do is the government has, to date, we've calculated, invested about $20 million since 2013 in social businesses in Israel, and this has helped lessen dependence on the government for those needs and social services. The other thing that it's allowed us to do is to work with the government this year on creating a law, the social business law, that IVN wrote and presented to the Knesset, and it was passed in a preliminary vote in July. And this is one of the most important things, I believe, and I think IVN believes, this is one of the most important things that we can do for the social impact investing scene in Israel, including, especially for social businesses, because we've now created the top-down approach that will help change mindset and government mindset, as well as the bottom-up approach. So Yozma has helped open up the door to a lot of this movement and activity, and has helped us really invest in areas of youth at risk and other employment engagement opportunities.
That's great. That's great. I want Yossi to speak a little bit to the impact of Israeli companies working abroad and globally. So, obviously IVN and Dualis are having fantastic impact on employment and issues domestically in Israel. And this gentleman has had an extremely busy week. So I want to hear a little bit more about that and how you see Israeli companies increasingly playing a role in development abroad.
Thank you. I was touched by your introduction. I want to thank Nigel for the shout out. He was my first impact investor. We had no experience. I didn't even know the term impact investor, and we had to do 4 friends and family rounds in 2008, which was the worst time to do it. Luckily, all 120 of our impact investors this month are getting their 3rd dividend and will get dividends for the next 20 years. It was not only for individuals, it was the first investment that Karen Kayemet, JNF, ever made in its 110-year history, and they're also getting dividends. And I want to give a friendly amendment on how you calculate money that's been leveraged for impact, because this Israeli solar industry, we at Arava deployed $400 million already, and the industry has deployed $2 billion. And so it depends what you're counting on that. We're an activist family. We're looking for scale, and we're looking to get scale, business models for Tikkun Olam, and how can Israel be really a platform for solving global problems through a business model. I'm currently heading Energia. It's an impact platform. And what Vanessa is alluding to is I just got off the plane, because yesterday I was with the Prime Minister at the King David with all the African ambassadors to Israel and other key government people, including USAID. And yesterday, the State of Israel signed on to the U.S. Power Africa program with AID. This is a big deal. And what that means for you, especially you, the institutionals, that means any investment, not any, but most investments that you make through an Israeli solar, wind, or hydro company into Africa will carry American government guarantees, as well as probably financing. And so this is a huge development that should really be an accelerator for all of you and all your pension funds and all of those to go into these cash-producing assets now, as of this morning. Special for Julie. The timing was meant to give you guys a boost. We're targeting for institutionals about a 10% annual return. There are 600 million people in Africa without access to electricity, and there's not enough tzedakah to turn that around. It's going to be a business model. We have a quadruple bottom line approach, and we're not that unique. A lot of Israeli companies have this. Investors, humanitarian benefit, environmental benefit, and uniquely, we want to advance the brand equity of the State of Israel, Israeli diplomacy in Africa, and the brand equity of the Jewish people. We are doing our last friends and family round now on the global company, and we expect to go to financial close in Burundi in January. Our investors will get at least a 12% return there. It's already full, guys. But it's going to supply 15% of that country's power, and it'll have American government or World Bank guarantees. So now you can start, as of this morning, looking at Israel really as a gateway to essentially an infinite market of doing good using Israeli companies. So thank you. I'm also here with Weldon Turner, who's over there, and he's the finance guy, because I'm not. Thank you.
Shlomi, as someone else with Social Finance Israel involved in the Israeli innovation that's then sent abroad, we're going to give you the most impossible task right now. Explain a social impact bond in 60 seconds or less. And talk to us about how the innovation in Israel is being expanded upon.
Okay, so I think the last panel, social impact bond, also known as a Pay for Success Agreement, and in the last panel, Mr. Rubin mentioned it is partnership with our big sister, Social Finance US. Well, social impact bond, or SIB, it's a unique partnership between public, private, and social sector, aimed to drive money from the capital market in order to finance social or to solve social problem. Now, the idea behind it is actually very simple. Most or many of the social problems cost money. If we can quantify how much the social problem costs, usually for the government, and then we can raise money from private investors in order to finance effective intervention program, while the government will measure the intervention, and the government will pay back the investor based on successful outcomes. And the money that the government pays is paid on actual saving that she made, or it was made due to the intervention program. So I'll give maybe a short example that also Vanessa mentioned, the newly launched diabetes SIB, a SIB that is aimed to reduce type 2 diabetes. Well, the diabetes costs a lot of money for the government, for the HMOs, for the medical and the healthcare system, and for Social Security. What we did, we tried to quantify, together with the HMOs and the Social Security, what is the cost of the average diabetic person in Israel. Then we raised about $5.5 million to finance lifestyle intervention with pre-diabetes, people that are not diabetic yet, but have really a high chance to become diabetic in the next few years. Then we measure our intervention group for 5 years, checking their fasting plasma glucose and their hemoglobin A1C, and checking how many of them convert into diabetes, comparing with control group. Now, the delta represent the saving that HMOs and the government have, and the government pay back to the investors based on a predetermined metrics, of course, money. As the more people are not converting to diabetic, the more money the investor will get. Now, this model is relatively new, or very new even, and in the last few months, we are lecturing and trying to export the model to countries like in Sweden, in Spain, in England, in Denmark, Finland, in the States, and hope many of those kind of SIP we'll see in the future in diabetes and healthcare in general.
The social impact bond is an incredible tool because it really aligns interests from different players in a way that provides a market rate of return. As I said before, I think Ella Fund is an amazing example in Israel. This is another fund looking for market rate of return, but that also is pursuing social impact in that process and sees that as a very essential and necessary way. So I would love to hear a bit more from Colleen about that process of putting together the fund and why impact was a critical piece of that, and what impact you're looking to have in the Galil and the Negev.
Great, thank you. And it's really, Vanessa's been handing out compliments to all of us, but I think it's also important to say what an impact she's had in bringing together the entire impact universe in Israel. And I think the service that she's doing to impact in Israel and getting it on the platform is incredible. And so thank you.
Thank you very much.
When my partner and co-founder Scott Shea is in the audience, and really when we looked at a problem that we identified in Israel, which was the fact that the Negev and the Galil were lagging far behind Medinat Tel Aviv, which is the center of Israel. We really looked for solutions that would be the best solution to address the issues that were facing the Negev and the Galil. And if we had a panel on this, I could talk easily for hours and days and months, which is usually what I do, about how critical the economic strength and the importance of the Galilee and the Negev is for the future of Israel. And Scott and I spent a lot of time thinking about what the best way to really put the Negev and the Galil on the same track as the startup nation in Tel Aviv. The Negev and the Galil is 70% of Israel's landmass. The non-high-tech jobs in Israel are 92% of the jobs. So talking about startups and VCs is very important because it's amazing what has happened in Israel. But it's also very important to have the rest of the country, the industrial manufacturing parts, the geographically further away from Tel Aviv parts be just as strong, and I think can be even stronger and really put Israel in the best place it can be. And so we looked around and we saw that there's amazing philanthropy going on. We saw that the government is doing some important things with relation to infrastructure. And then we looked also at what were the problems. The problems were that companies in the Negev and the Galil generally did not have the access to growth capital that they needed to grow. They all kind of got stuck at a certain level of their growth. And they also did not have access to the management expertise. This is something I actually really want to talk to you about the MBA program because I think that's a critical idea. When I was at Columbia Business School, the impact education there was very important for putting me on this track. And so we looked to build the right model for addressing how companies could get access to growth capital and could get access to the best managers and the best management expertise to keep doing what they were doing, bring it to global markets, but stay deeply rooted in Israel and actually grow and expand in Israel, specifically in the Negev and the Galil. And we felt the best model for that was creating a private equity fund for industrial manufacturing businesses. We're talking about low and mid-tech businesses that have a product that you can touch, businesses that employ many, more than sort of two guys in a garage, that have factories, that have production, that have automation. And we brought together a team that includes Scott and myself, obviously, and also some great partners from Warren Buffett's first investment outside of the U.S., from Iskar. We have Steph Wertheimer on our board of advisors, and very importantly, the former CFO and the architect of the Buffett deal, Danny Goldman, joined our team as well. And basically, now when we go into these companies, we're saying to them, let's build your business the right way. And one important proof of building your business the right way is that you make a lot of money. So we say finance first because it's a very delicate way of saying we want to make a ton of money. But we actually feel that making a ton of money in the Negev and the Galil is the best proof of the impact model, because once we are successful with strong market rate returns, then many, many other investors and companies will want to come and see the tremendous advantage, both to their bottom line financially, but also to the future of Israel in starting and growing and keeping their companies and their factories in these areas. And it's important to say that the best, what we are seeing more and more in the statistics that Fran showed in many, many statistics, is that once you invest in a company that is, we're also a gears-rated fund, which means that we want all of our companies to be B corporations, which means that they'll all have respect and want to enhance environmental, social, and governance, which means they want to respect the environment that they're in, respect the workers and the communities that they're in, and of course be transparent, which is a very important feature of all Israeli companies. And once they're built with these great ESG impact best practices, it's only going to enhance their financial bottom line more. And so we closed our first fund a few weeks ago. We've made our first investment. We have a tremendous, exciting pipeline. And what's important to say is that the pipeline is not necessarily only companies that are doing great work in the classic impact space of energy, alternative energy, although thankfully there are many companies like that in Israel that do water or important global contributions. But our first investment was in a laser company. And we didn't start out by crossing it off because it doesn't have an ESG policy, but our dedicated impact analyst in our fund is now going in there and saying, no, not ISO, impact. And they are now beginning to see how important that is to improving their business, to selling in Europe, to selling in America, to expanding their factory with a more diverse workforce, with a waste products that don't negatively impact the environment. And this is part of our investment in the fund that we believe at the end of the day is going to make our investors a lot of money and also make them very, very clear about how important their investment has been to strengthening Israel in the future.
Absolutely. 2 points. Obviously, I think all of us have a responsibility to be working towards market rate returns because number one way that we can attract more capital and build this field is by demonstrating those returns. So it's a critical stage for that. Also, shameless plug, thank you for B-Lab Israel. After much lobbying of B-Lab, the nonprofit group in the US, to start B-Lab Israel, they were focused on B-Lab South America, B-Lab Europe, and B-Lab Australia. And, after harassing them, they said, do you notice these are all continents? And Israel is this tiny country. But we finally made the case that this was a very important market for impact companies and are just in process now of launching B-Lab Israel. So, Dalia, I want to hear from you as someone who, navigates this space and works with federations and family offices and foundations. Tell us a little bit about, maybe using UJIA. I'll say it's the federation in the UK, for those of you who are not familiar. Maybe as an example, talk to us about their process of looking for impact investments in Israel, and more generally, what you would advise someone who may be interested in learning more about how to get involved in this space.
Okay, thank you. Good afternoon. So we crystallized the why, what Judy said, and we took a long time about it. And our why was, why do we, the UJA, want to make impact investments? First of all, we wanted to turn around capital, right? We're a charity. So £500,000 that we invest is going to hopefully, or at least mostly, come back in 3 or 4 years. That's £500,000 that we don't need to fundraise. Second, we wanted to impact the projects that we were already involved in. So employment, education, community development. We wanted to leverage our impact in that. And third of all, and Michael said it like it's the most normal thing in the world, engagement is really not a normal criteria for any investment, let me tell you. So yes, maybe that resonates with a lot of people in the room, but as an investment analyst, using engagement as a criteria for investment is not simple. So we had a 7-stage process. We crystallized the why, we wrote investment parameters, and Charlene mentioned the investment policy statement of Heron. I can second looking at investment policy statements. There's a whole database online. We also wrote our own, and actually all of the clients I work with write an investment policy statement, and that can be half a page. But you have to do this, otherwise you're going to get lost. You have to know, what am I willing to invest in? As a charity, do I want to hold equity, or do I just want to do debt? Do I want to focus on Jerusalem, or am I happy to invest across the country? How much risk do I want to take? Do I want to have double-digit returns, or am I happy to just see my capital back? So we spent a lot of time on that, and then we needed to find deal flow. And here, again, engagement being a large part of that, we did a very public request for proposals. In fact, we're right now in the middle of the second cycle, so you can see that online. We used all social media, all of our networks, to look for proposals, and we had over 70 proposals across all asset classes. I cannot stress enough that in Israel today, we have impact investment opportunities across all asset classes. So you do not need to compromise your fiduciary duties. You do not need to compromise on returns. You can find everything today in Israel. So 70 proposals, screening, again, we made it as engaging as possible. We've got an investment committee, 13 professionals, financial professionals sitting in London, and they decide. So yes, we're the bridge, and we bridge that information to the team in London, but these 13 investment professionals who feel passionately about Israel, but we're not involved in the UJA, they make the decision. So we've screened. So then we had to do due diligence. We did due diligence on about, 6 deals. And by the way, we do due diligence like any other investment. Again, you do not need to compromise. And then we allocated our assets. So we have made 2 investments in the first cycle, just so that you have a taste of the field. We invested in a microfinance fund for the Ethiopian community, and we gave a bridge loan to a NGO doing urban regeneration. And urban regeneration is not represented here at the table, but there are 4 huge urban regeneration projects today in Israel which are looking at very attractive returns, huge impact, like changing face of the country impact. And then, of course, we measuring and evaluation like with anything you would do. So my advice, if you are thinking about making an impact investment in Israel, and I'm assuming that everyone in the room is thinking about making an impact investment in Israel, is start exploring. No one is going to make you sign on the dotted line. Like, ask us. You have 4 hours till the end of this conference, but ask us what we've seen, what we're doing. Go to the other people who are giving philanthropically in the fields that you're interested in. Anyone in Israel has heard about impact investments in their space. So start asking. Second of all, do a case study. Don't use an Israel or Jewish-related case study. Look at Ford, look at Kellogg. Find somebody who here in the US is doing what you want to do and doing it well. So we work with Rothschild Caesaria. Alan already mentioned them. They are focused only on higher education. So we took Lumina Foundation, whom some of you have maybe heard of. It's one of the largest foundations here in the US doing higher education. And we interviewed them, and we did a thorough study on how they make impact investments. And we used their process to apply to Rothschild Caesaria. So that would be the second recommendation. And my third is I would start with funds. Now, no one on this panel bribed me to say that, but if you look at how most people get into impact investing, most of the institutions start with impact investing. They start with the funds, they learn the space, and then they make direct investments. But if you do not have the capacity, and Jerry mentioned that, if you do not have the capacity on the ground, making direct investments is very difficult. So I do recommend that you learn about the funds first.
Thanks, Delia. We'll take, I think, 2 to 3 questions from the audience.
Thank you. Thank you very much for your presentation. Actually, your panel decided me to make this comment, and I would like to have your feedback. In fact, I think the real issue, it's not how we define impact, but how we redefine profit and how we redefine return. Because we talk about markets. Markets have failures, and we call this externalities. In fact, the actually financial industry has a lot of negative externalities, which, if would be included in the equation of return investments, will lower the return, while the impact investing has a positive impact, which we call a positive externality, which it's included in the equation, will higher the return. I think the real issue is including positive and negative externalities. These are terms in economics. Will really change the face of the financial industry. So the real question is how we redefine profit. Thank you very much.
Thank you. One quick comment on that. I think that's part of what we're working on in Israel is not just growing assets under management, but including improving the professionalism of the different investors. We have traditional VC funds that are now coming and saying, we'd like to be impact investors too, because they see that LPs are demanding this. So looking to import best practices, and that's one of the goals with B-Lab in particular, is to have standards that incorporate not just what a company, what their product or service is, how they manage their company, how they treat the environment, the governance, how they treat their employees, how they give back to their community. So absolutely, it's an important point.
1 second, there's a question behind you.
Sorry, could you talk about initial investment? And so if we start off putting money into one of the funds, which is the way you've allocated it, what's the minimum size that you take in terms of a fund, and how big should it be of our funds? And then are we subject to the same accredited investor rules here in the U.S., which means $25 million or more in order to make the initial investment? Thanks.
Sure. We can run down the road quickly. Zora to date has been doing deal-by-deal investments. We've been working with investors at a minimum of $10,000 per any deal. Going forward, we've done 5 investments to date, are looking to expand our portfolio to 25. So we'll likely be increasing that minimum as we do that.
For friends and family, which is a higher risk, at the parent level, between 50 and 100, our average has been about 100. To actually go into our projects, you need to be an investor in the parent, but we'll probably look at about $1 million minimum, depending on the size of the deal, and that's the one that comes with the guarantee.
In our case, our investors are between a minimum of $100,000 and the average is about $250,000.
Well, I'm happy to say that the ELA Fund is closed to new investors at this point. Stay tuned in 2019 or so, when hopefully we'll have lots of strong returns to show you, and we can go back out in the wonderful world of raising a fund. But we really function as a standard private equity fund that you would see that model in other non-impact funds.
Well, here it depends on the SIB itself, how big it is. The higher education SIB we already launched the minimum was $50,000. The diabetes SIB the minimum was $100,000.
So I don't represent a product, but what I wanted to say is even the smallest amount, there are ways to get involved in funds. So for example, there are lower limits for the microfinance funds. You can get involved in a slightly higher risk portion of a fund like Bridges, for example, where there is no minimal investment. So there are opportunities irrelevant of the size of the fund.
Hi. So we manage 3 funds in addition to the advocacy work we do at the government level and the professional development. We have 3 funds, and it depends on what you're looking to do. So right now we are closed to social investors until we open up a new fund, which I think is under discussion at the moment. But through our tandem fund, depending on what you're looking to do, a philanthropic investment would be anywhere from the minimum would be about $10,000, we would hope. And then in terms of our Yozma fund, we're looking for a much higher philanthropic investment, so probably around $50,000 to $100,000.
The definition of accredited investor is different in Israel, but I think it depends on where you're soliciting investors from. But yes, accredited investor rules apply. I assume that the majority of investments are under the 506B.
Thank you so much, panelists. Thank you, Vanessa, for moderating.